Morning, good evening, everybody. Yesterday I did the uranium recap. I highly suggest you go look at that one. But today we're going to talk to gold and silver, the commodities, oil, platinum, all that good stuff. It's been like a week since we did it, so there is a lot of things to catch up on. And as always, Twitter, YouTube, follow me, subscribe. Highly appreciate every single one of your votes or whatever you want to call it, subscriptions. So yeah, let's stick right into the stuff. We have a long list to go through, I think. Yeah, it's quite long, but we will see what happens. Silver, what is silver doing? A quick reminder, we have the initial jobless claims today here in like, what's that, 5 hours, 4 hours, maybe 5 hours, which I think will be a big event as always. And so keep that in mind as we go through the chart, because some of the charts are at a very big inflection point. Okay, so where are we with, there it is, we're with silver, one of our favorite metals for sure, but from a price point of view, not so much. Anyways, we are getting close down to the 22.1, 22 in that range. You can see the horizontal support right here. We're also getting close to the uptrend here, the green one, and we are not oversold, but to some degree, yes. And I do think, depending on the jobs number today, that we could get a bounce here. If it don't hold and we get below the 22, then we have a quick route to 20.5, because that means we'll break a, what's that, a 1 year long trend line, and also a massive support at the 22. So yeah, we'll have to wait and see. But we definitely cannot lose this low here. I would love to have a marginal higher low. We have a higher high, higher low marginally for this cycle low. That would be preferred. Gold is also at a big inflection point here in time. Hopefully this is a double bottom. As you know, I really thought this would be a inverted head and shoulders. Right here, you have the left shoulder, the head, and then somewhere around here, I had drawn the right shoulder with the neckline up here. But clearly, we are negating that theory, and now we are at the same low as we were in June, at around 1900s. So again, depending on what happens today, I think with the jobs numbers, that will define if this is could be a double bottom. You can just take a look at the squeeze here, or the squeeze right there. Right there it is. So this is a bullish setup. Obviously, if we spill below, that's not what we want to see. But hopefully, we can start to curl up again. I really thought that we would have done it way before for this inverted head and shoulders, but that pattern did not come to fruition. So it is what it is. Gold to silver ratio. Again, we are above. You can see here, we broke this one here, which I didn't think we would. But anyways, we are here again. Again, you can note that we have a lower low, quite similar to the gold, and hopefully a lower high as well here, right? So we have a high, higher high, and a higher low, a lower high, excuse me. There it is. So I really want to see this one start to plunge down through. So this is the fake out. Again, the jobs numbers today will be the key, I think. We can see that in 5 hours time, maybe at the end of the day. Hopefully we'll break down here, and then we have some sort of a iffy looking head and shoulders. But anyways, let's see what happens there. We really need to get below again. We don't want this to be a back test and then resumption, because then we have the bigger trend line in play, which we cannot break for sure. But then again, that would be devastating for all markets if you start to get below, above here, this one, all the way down there, you can see it. That would be extremely bad for gold and silver. But also the overall markets, that would be extremely bad. So again, where are we on the dollar, the Dixie? I just want to make it, we have this rail here, which is these tops up here. I cannot find a good one line trend line, so I have made a rail instead. Makes more sense. So we are into some stiff resistance here. We did break this one. We have this one down here. You can see it if you follow the mouse there. We did break it early this week, or was it late last week? But we're coming into a big level, which is 103.5. You can see it right there. And we are almost oversold. So yeah, again, I think the job numbers will be key. What happens today? So I think we can do the recap on Friday and see how the job numbers went, what happened. But this is a strong move, very, very strong move, right? Also a bearish setup because you have a bear flag right there. So I think it's just like here, right? And the same here, here. So I would assume that we are rolling over. But again, this is a very, very strong move. No doubt about it, especially after the breakdown of the big 108. Yields 10-year coming into the double top or to a double top here again, aligned with the jobs numbers. Let's see what happens. We have some sort of bearish setup there. So again, I don't expect it to blow off straight away. If we are to go higher, we need to rest. That's my take. But the bull flag here clearly broke. Retest resumption. So yields or the rates, excuse me, yeah, they look very, very good. But again, let's see what happens when we get up to this. What is it? 4.33. Bitcoin, big technical damage done. I just noticed I haven't looked at Bitcoin this entire week, but you can see the green. You can see the green uptrend there. We're breaking down here. This is very technical bad. Again, this could be a fake down or fake out to the downside if the job numbers comes in very bad, and for some reason Bitcoin reacts very positive to that data. But anyways, if not, then we're going down to 25 quite easily. The support right there. That's how I see Bitcoin. Palladium is doing nothing still. Again, as you know, I have my squeeze here, and we're coming into the big support, which has to hold. I think it will, at least we'll get a bounce. I don't know if it will hold long term, but I think we'll get a bounce once we get down to 11.50, more or less, which is right here, around 11.50, 11.60, give or take. And I do expect a bounce to the upside. How big will it be? I don't know, but this formation here could mean a big, kind of a big retrace, maybe up to the green. Green. That's not green. That's red. The green possible. Again, I say possible neckline. If we can get all the way up there, then we have a possible bottom pattern. Again, it will be confirmed into 2024 anyway, so that's quite some time ahead. Quickly, platinum looked very good here, insanely good. You know, the breakout, the retest, almost resumption. We didn't take out the breakout high, as you know, and now we're just rolling over. And just want to show you that we are breaking down from this bed. But let me remove the bull flag just so you can see it more clearly. You can see here we are breaking down from this long-term orange support. There is one savior still, which is this one here. Let me zoom out for you guys. We have a long-term trend line coming here and piercing right through all this this cluster here, and we're getting down to that again. And if that doesn't hold, if the together with 900 level, we're a bit below, I know, but still the 900 level zone is very big support. If it doesn't hold, then I assume we're gonna go down to the 800s, excuse me. Again, are we oversold? Yeah, we have some positive divergence here on the RSI. You can see right there the RSI going up while the chart is going down. That's always a good sign. Again, I don't use it that much. I only use it for some extra verification. But still, very big inflection point here. And you could argue that you have a bullish channel there that could break to the upside. So right here, the $900 level for platinum is a very big level for, in my personal view. Excuse me, let's look at copper. Copper looked fantastic at some point, but now it looks very dicey. Dicey. Let me just make it nice and clean. We have the breakout here. It was a wick on the weekly. You can see the horizontal important resistance there. It was a wick. Now we're coming all the way back down to the green again, holding for now. Let's see. I mean, we need to hold. We are bouncing here today with a tiny amount, but still, again, I think the ops numbers will give the direction. And in my personal view, we cannot lose this long-term green support. That would suck a big time. Okay, oil. Let's go to the daily. We had a big breakout here. You know, we tagged it, came down a bit for rest. We broke out, came into this 82, 83 zone that we have talked about, peaked above, and now we're rolling over. Again, I think when we came into the 22, the 82, 83, I had a pullback down to this one here at around 75. And I think we could be on point to do that. And that's the case as long as we're not breaking above this double white resistance. It's a big level, as you can see all the way across. So this was a fake out clearly. And now we're rolling over again. And I do expect if we get a pullback all the way down here, that would be very, very positive for oil, actually, just to get a bit of a short-term reset in the price. And we will make a higher low, a high, excuse me, and a higher low. That is also quite good. And again, the inverted head and shoulders would happen as well. So it makes sense. So I would actually prefer it to get down to the 75 to have a really big, strong, possible strong reversal pattern right here. So that's how I see oil. Gas here, nat gas is fighting clearly. Nat gas looks really bullish on in Europe, but also here we have this one here at around 3, which is the key resistance, and we're in a bear flag. So if we get above, again, $3 for nat gas, very bullish. Again, breaking down from the bear flag, then we're going way lower again. But again, I think we're heading into the winter month here in a month or 2 months, 3 months in Europe. So yeah, I need to switch to Heikin Ashi because the candles are very strange. Here you can see the European gas trying to make a bottom here, getting above 40, 43, give or take. That will cause a big spike to the upside, clearly. And this long term, as you know, we've been talking about, was support, and we bounced big time here. So all good, and this looks like we are in the stage 4 downtrend, and now we are in a stage 1 basing pattern, and hopefully we go into stage 2 at some point within a month or 2. XOP, let me switch back. As we previously discussed, this was a very strong move into long-term resistance right there. And again, after such a big move, we did have the breakouts here, but this is a very long and strong move, and it's very rarely that I see that get a big pop after such a move here. And we talked about having to reset a bit and then hopefully go higher again. So we have this one here, that one there, which could be the target at around 135, which would be perfectly fine actually to get a big reset on the RSI. You can see it clearly very overbought. And if we reset, we will get down into the 50s or 30s, depending on how low we go. That would be great. OIH still looking all right, as long as we hold these levels here. Again, I do expect us to kind of reset a bit here again. We were very overbought here. The same over here. You can see the reset we had. So we could go down into the close to maybe drop like 10% or so to get down to. So yeah, a reset down to 300 would be optimal. And this would also be perfectly aligned if oil goes down to 75, that we get a rest here down to 300, a 10% drop both for oil and for OIH. Makes sense, makes total sense. Lithium, or the LIT, had also where I bought the breakout here. I got stopped out like a week later. And this was a fake out in the rear mirror, but I think again we're going in for a third impulse, lower low down here to roughly 54. So if you are interested and you can have a buy here and the stop loss straight below, this is still a very bullish pattern, the pole and the bull flag. So nothing for the long term, it's very bullish. But it came to me that this has a lot of Tesla and so on into it, which has pulled back quite a bit. So that might be the reason why. Again, if you want to play it safe, which I think in this environment, I think it will be better just to wait for the breakout here and get above again the 70s, the previous high here, the fake out high. That would be the safe play to do. XLF, the banking sector, is looking very nasty. Fake out here again to the upside, which we talked about as well, and we're still in a bear flag. And I expect us to go all the way down to the lower trend line of the bear flag, and until proven otherwise, this bear flag should resolve to the downside. Also, look at this long term. If you look at the white long-term horizontal line we have, you can see it. If this one gives in, this is the 2008 high. So if this gives in, then the banking sector is in for some, big time damage, as you know, which we have been talking about. The big currency pair you need to look for if you're into gold and silver, in my view, is the dollar against the Swiss franc. This one is the inverted correlation is on point. If you look back 50 years, you can go and do it yourself. If you invert this chart overlaid on the gold chart, you can see the perfect relation. And what happened, as you know, is that in my view, we broke a bear flag right here. You see, we have broken down and we're getting a bit of a retrace, which is perfectly fine after such a big breakdown. And we have the levels here. You can see it. This was a big level, right? We broke down, came in, rolled over again, came into this low there, and now we're rolling over again, maybe, and then we'll see if we roll over again, if the pattern continues. Again, this one going down is very, very positive for gold because they are so invertly related to each other. And yeah, again, you can see the alignment. We have the big jobs data coming out today, and we are at this pivot low there. So NVIDIA, I still think, as you know, I say that quite often actually, but still, this gap will get filled at some point in time, which could be a good trade to do when we close that gap. The bearish wedge is broken. We have made some breakdowns here on the bull flag. Again, I think this is just one big rollover top, in my view. The Brazilian ETF is about to close a big gap. There are some gaps as well, but this gap right there, we're about to close. And this one is why this one is a bit too much fucked up. Oh, anyways, but still, we are getting a pullback. We were pretty much over. You can see it here, overbought, negative divergence, and I think once we get oversold, it's going to be a perfect entry for this long-term bad boy here. You can see it here. In my view, this will be the last retrace into a high low. Let me zoom out. You can see we have the high here, and I think we'll make some sort of low there. And then this could be the buying opportunity of a 5-year long hold, bullish hold. It also pays like 10% dividend, which is not too shabby given that time period. So nickel, what is nickel doing? Haven't been looking at nickel for a long time. What's it doing? Nothing. Well, actually, I need to go to the log scale. We're kind of getting back into or below this long-term support right here, which is not ideal for nickel. And if we do get down here below, then very often we visit the lower trend line. So yeah, let's see. We still have we don't want to get below 1700. That's for sure. CLJ, it's very tricky for me to chart. All I want to show you actually is this one, which is the First Majestic, the AG against the silver spot price. And look at this one here. This was 2016, where we broke out to the upside, where First Majestic outperformed silver big time. And now we're kind of trying to do the similar thing, breaking out here. and this would be the big one. So it could be that we are in for the lows for the miners again. I will not give my view on it because they're very tricky to chart in my view. So let's follow gold and silver and the ratios, like the gold to silver ratio, but also this one, which is more telling in my view. All right, this was a long one. I hope you enjoyed it and stayed till the end. Highly appreciate it. And we will see you in the next one. And let's see what happens today in like 4 hours when we get the jobs data.